The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. So let me tell you what's going to happen here today during this webinar. It's a Q&A webinar, which means I know you've probably been to lots of these types of webinars. It's usually very slick, very polished, high-octane sales pitch with an unbelievable offer at the end. Okay. I kind of don't fit the norm when it comes to that sort of stuff. So it's not going to be rushed. It's not going to be hurried. I'm going to address any and all questions that you might have. I'm not going to ask you to hold all your questions until the end. As you have a question that comes to mind, just use the chat box. No one sees what you type in that chat box except myself and other CFRN admins like Valerie, Michael if he's here, Bert if he should show up. So just relax, okay? Again, this is to help you understand who we are, what we do. We've been doing it for a very long time. We're very transparent with everything that we do. We have a live training room every morning, 9:30 a.m. to 11:30 a.m. Eastern. We take a 30-minute break. We then come back and do a 2-hour live broadcast where we're talking more about events of the day. We talk about the markets and about trading in more general type terms. The floor is always open for questions there as well. In the morning during the live training room, we are actively trading short term. And by short term, I mean we use a pretty fast time frame because during the 2 hours, we want all of our traders, especially those who are just learning, we want you to learn the core methodology. It's very simple. It's simple by design. We haven't changed a thing in, I guess, about 7 years. I mean, we haven't changed a rule to the methodology. We haven't changed any line of code in the indicators. If something's not broken, there's no reason to fix it. One of the last things you want to do as a trader is to change your swing every time you step up to the plate. I know, at least for me, when I first started trading futures, I left equities for the world of futures. Well, I tried that yesterday, and I tried that the day before. I think I'm going to try this today and see if it works. Well, the problem with that is you never end up knowing what quote unquote works or doesn't work because you don't spend enough time with any one thing to determine if it has validity or not. And the truth of the matter is everything works some of the time. Nothing works all of the time except for the market. The market works perfectly every single day. Our methodology mirrors the market's behavior. Now, what does that mean? Okay, we don't fight with the market. We don't argue with the market. We don't wake up each day ready to do battle with the market. Our philosophy is that the market is actually our business partner, the senior partner. And the senior partner makes all of our trading decisions. All we do is tag along, yes sir, no sir, and follow as closely as we possibly can exactly what the market is doing at any given time. Now, it sounds like someone else just showed up
That was me. That would be me.
All right, Michael. This is my partner, Michael. He's been with me. We've been together CFRN-wise since 2006. We launched CFRN back in 2005, so we're in our second decade of broadcast history. Our weekly trading zones, which you'll learn about today, we've published those for our traders every Monday morning since December 14th of 2009. They provide a framework for our traders for the entire week. Once we publish those weekly zones Monday morning, they're good for the whole week. We don't change them, massage them, manipulate them. They are, in fact, carved in stone. That is really one of the cornerstones of what we do, because everything is kind of based around how price moves between a couple of very simple indicators and those zones. And I'm going to go slow, and I'm going to walk you through alerts from this week and allow you to ask questions, along the way. Now, in every webinar like this, there's almost always that one guy in the audience, or two. If you've ever been to a stand-up comedy show, there's always a heckler in the audience. So if we have a heckler today, you're not going to rattle me. You're not going to ask me any question that I either can't answer or I'm afraid to answer, because again, we're just real transparent with what we do. Now, because our approach is so low key, that kind of turns some people off, because they want excitement and adventure and secrets that nobody else knows. And I'm just, before you spend an hour listening to me, I'll just tell you, we're not those kind of people, okay? Now, what you see up on the screen right now, Futures Magazine published an article back in 2005. I mean, just as I made the commitment to leave equities for futures, out comes this article that says 9 out of 10 new traders fail. Super. Boy, that's what you want to hear first day on the new job. Nobody ever disputed that article, because everybody in the industry kind of knows it's just a fact. And it just kind of hung in the air, but it bugged me, because I've done a few things in my life, and I know that, or I don't know of any business, any industry, any profession that has a 90% failure rate. So inquiring minds want to know, and I wanted to know why in the world 90% of people that try to become futures traders fail. It did not take very long to connect the dots. What it came down to is that 9 out of 10 people simply never had anyone teach them how to trade. There's plenty of places on the internet where you can buy indicators and strategies and methodologies, and you may get a set of instructions, a PDF. You might get a couple of videos, but that's not the same as actually teaching someone how to trade. Now, the example that I use often, if the plumbing breaks in my house, I'm not going to get out my toolbox and try to fix it. Not because I'm lazy, but because I don't know anything about plumbing. No one ever taught me how to plumb. Same goes with electricity. If my electricity goes out, I know how to check the fuse box. And if I don't see a bad fuse, that's where I stop. I'm not going to stick my hand up in the wall fishing around for the problem, because I know what might happen. Again, the reason I'm going to call an electrician is because nobody's ever taught me how to do electrical work. If I had a friend with a nice Cessna and he said, Dwayne, man, you can take this thing anytime you want, go anywhere you want. Well, that's a great offer, but it'd be pretty foolish to climb into the cockpit and attempt to go somewhere until after someone actually taught me how to fly, because otherwise it's just going to be a one-way trip. Now, there's something about futures when we first look at a chart and maybe we see a video of somebody putting on and taking off trades. We go, heck, that's simple. I can do that. Well, we learn pretty quickly that it's just not as simple as it seems or as easy as it seems on the surface. Our logo, or not our logo, but our slogan or motto really kind of covers that. Trading's not easy, but it can be simple. And so what Michael and I have tried to do is to put together something for new traders that is in fact simple, but it's never going to be easy. When Michael and I started out together, between the two of us, we owned every indicator and every oscillator that you could buy on the open market and even probably the black market. And once we bought everything that you could buy, well, we just started creating our own. We used to both be certified TradeStation developers, which sounds pretty, but we were not making money on a consistent basis. We were spending a lot of money. We were wasting time and treasure to go nowhere fast. So we realized the error of our ways. We put a stop to all that. We sort of cleared the drawing board, and we began to look not for magic, not another parlor trick, not another ancient secret. We decided to just figure out how markets work. And once we had a firm understanding of how markets work, and they've worked exactly the same since he and I began this journey, and if we go back to historical charts before that, they were also working the same way, even before there was computerized trading. One of my good friends who recently passed away, Mike Reed, when he started trading, he still drew his charts by hand. We now own the TradeStalker site. I want to keep it alive in memory of him. He was a good friend and a mentor to me. Between him, my other good friend, Mark Douglas, author of Trading in the Zone, who has also passed, and Michael B., who's here with us today, most of everything that I know, I learned from them, and then I took the things that I learned from them, and over time, I developed my own understanding of markets, and the understanding that I have of markets is an understanding that Michael and I today share. So Michael will be speaking a little bit today. He'll be answering questions. The way we divide up our duties is he's in the room teaching our core methodology every day, Monday through Friday, 9:30 to 11:30 a.m. I host the radio show. Michael's on the radio show with me each and every day as well. I handle the alert side of the business. We have two types of alerts. We have what we call our Concierge Trade Alerts. They've been around about 6 years. We did a 3-year public beta before we took that product live. And 70 weeks ago, we launched LOGIC247. Now, the difference in the two services, the Concierge, those alerts are based on previous price behavior. You get a static report each evening shortly after the Globex Open, and those numbers are good for the entire session. LOGIC247, those are dynamic real-time alerts that come to you via the private Telegram channel as opportunity develops. If it's 2 a.m. or 2 p.m., if you have your trading hat on, which means you have notifications turned on, when you hear your phone, tablet, or computer go dee-dee-dee, that means there's an alert. You should never feel obligated to trade an alert just because there is an alert, because if you don't have your mind right, to borrow a line from the old Cool Hand Luke movie, if you don't have your mind right, you should not be trading. If you're, preoccupied with something else, you have some issue going on in your life, you're fighting with the wife or the husband, or yelling at the kids, stay away from the trading platform. Now, when you do have your trading hat on and you are ready to trade, you turn on the notifications for our Telegram channel, and any alerts that have been issued since you turned it off, they're backed up in the pipeline. Because the nature of our alerts are different from other alerts you may have used or received in the past. Our entries, our triggers, are what we call important prices in important areas. Important prices in important areas are almost always tested. So when one of our alerts triggers, it is very likely that it will trigger a second time, sometimes even a third or fourth time. There's a higher probability that it will trigger multiple times than just triggering one time. So I've said a lot. I'm going to start putting some charts up. We'll look at S&P, Dow, Russell, NQ, Crude, gold. Now, in our live training room, we use a range chart. Michael will explain to you here in just a second what a range chart is and why we choose to use that to teach the core methodology. When it comes to the alerts, I use a 30-minute chart. That's my go-to chart. Everything Michael does in the live training room is exactly the same thing I do. The only difference are a couple of nuances with the guidelines. See, in the room, it's a rules-based methodology, so they are rules carved in stone. Because what I do is discretionary trading, they're more guidelines. So as we progress here, you'll see the subtle differences, but always remember, under the hood, it's the same thing. And if you want to succeed at what I do, then it's so very important that you invest the time and energy to make sure you understand that core methodology inside out. So Michael, why don't you take a few minutes, introduce yourself, and I've already told them who you are, but you can tell them who you are. And I'll look in the chat box to see what kind of questions we have. And
Okay.
again, nobody's going to see what you type. I'm not going to embarrass you by calling your name or something. So, just relax, ask the questions that maybe you think, well, they're not going to answer this. Well, yeah, you just might be surprised. We might, in fact, we will. So take it away, Michael. I'll be right here.
Well, there's a couple of questions in here.
Okay.
Yeah, Arturo. I bought that once too. Okay. Well, first of all, you all know my name's Michael. And the reason I do Michael B and not my whole last name, which is Bork, is because years ago, 2011, I think it was, somebody opened a bank account in my name and tried to transfer a whole bunch of money into the bank account. And fortunately, it didn't happen. That's why I just go by Michael B. So you can't see my name.
And he got tired of the Bork and Mindy jokes. Most of you probably aren't old enough to even get that joke, but anyway.
Yeah, Bork and Mindy. That's good. But no, most people pronounce my name wrong anyway, because of the way it's spelled. So Michael B is pretty good. And, like John. If you look at John's name, he's out there in the audience right now, and I mean you can't mess that up.
Actually, for some reason, my iPhone always wants to spell his name as Jon.
Really?
Which is like, I guess, the British or European way of spelling John. I must have some setting on my iPhone that makes him think of something else.
He might have some setting.
Yeah,
because he is British.
That's possible.
Well, he's an American, but he's originally from England.
But what a lovely accent he has.
Yeah, go live there for 3 years. Um, the stuff that I do in the room. Now, I'm just gonna let Dwayne keep the charts because I know he's working on something right here. The stuff that I do in the room, and the reason I use range charts is so you can be proactive with your trades. You know, like right now. Now I know the markets are closed right now, but the ES currently has a high of 46.50. I know it's going to have a low. If it maintains that high of 46.50, it's going to have a low at 45.50.
Let me do this, Michael. Let me just drop it down to that range chart that we use in the room. Now, guys, it says 4 ticks here, and it's not a 4-tick chart because that would just be too fast. The 4-tick part means every one of these candles is exactly 4 ticks tall. Go ahead, Mike.
That is correct. That is correct. I mean, if you know where the bottom of the candle is, you know where the top's going to be. If you know where the top is, you know where the bottom is going to be. So if you're looking to go long and you know where the bottom is, you can be proactive and put your order, a buy stop order, 5 ticks from the bottom of the candle.
And that's important. We enter our trades both long and short, not on limit orders, which is what most folks are familiar with, but we buy we buy and sell on a stop, which means the momentum of the market is taking us into the trade.
Right, right. And you know, we switched to this time frame, I don't know how many years ago, but I mean, there was a point where we had
about 8, I think. No, more than that.
Yeah, it was a long time ago. But when we started out, you know, we just did the ES and the YM in the beginning. Well, we did the Russell, but then we got beat up by it, so we quit it for a couple of years.
Yeah.
And then we just did the ES and the YM, and we had 3 different time frames for each market, and we had different indicator sets for each market. And it got to the point where the only one who knew what we were doing was us. So we
on a good day.
Yeah, yeah, on a good day. So we stopped doing that. There was one period in January, I want to say it was January 2008, but I'm not sure, where we went like 3 days with no trades at all. And then, you know, I had been messing around in the background with the 4-tick range in different markets, and I came to the conclusion that, you know, if you use a range bar, you know where the top is, you know where the bottom is going to be. You can be proactive with your trading. You can put your order on ahead of time, so you're not going to miss things. I mean, today I missed in crude oil. I missed a bunch today, but it was because I was responding to emails and stuff like that.
And answering live questions, of course,
yes,
in the
answering
room.
live questions.
This red candle, I just drew an arrow above. You can see that that candle opened at 31.50 half.
Yep.
If now after that candle opened, if it doesn't go 1 tick higher than where it opened, we know that the close of that candle is going to be exactly 4 ticks lower. And in the case of the S&P, 4 ticks is 1 point. So it opened at 31.50.50. If it goes no higher, the close is going to be 31.49.50. So now we don't know when we'll get a new candle, but we know where. On a, say, a 5-minute chart, you know when you'll get a new candle. Even if there's no price movement, you know when you'll get a new candle. But you don't know where that new candle is going to open. And it gives us this nice symmetry. So please go ahead.
Yeah, no, and you know, if you put all the pieces together, and if you learn each one individually, you learn, first of all, why we trade range bars. Second, what the indicators individually mean. And third, what the slingshot is showing you. And, you know, there's all the information you need right there to make a trading decision. And you don't need to, you know, you don't need to overthink things. Okay? You know, a lot of people do that. They tend to overthink things, and then they make bad decisions. You know, if you make a mistake when you're trading and you lose a little money, it happens. It happened to me today, as a matter of fact. I was in a gold trade that I should have got my stop to break even on, but I didn't. And I think it's because I turned away and looked at something else for a minute. Or not even a minute, like 20 seconds. And it had gone up into profit, and I should have had my stop at break even, but I didn't. And then, you know, when you put on a trade, you got to accept the risk every time, unquestionably. Say, okay, I'm going to put this trade on, and I'm accepting the risk on this trade. With the stuff that we do in the morning session, we have defined risk. It's 8 ticks every time. Starts out at 8 ticks.
Every market, S&P, Dow, Russell, Crude, 8. And the reason is because at this stage of your learning process, as you're learning the core methodology, we don't want you to have to worry your pretty little head over the stop. We're just going to go ahead and tell you 8 ticks because we know that will work with this range chart set at 4 ticks.
Right.
Down the road, we'll teach you about market structure, and then the chart will always tell you exactly where your stop loss needs to be, and if what the chart tells you exceeds your risk profile, you simply wait for the next trigger, because remember, I said our alerts and our setups almost always trigger more than once.
And not only that, but there's always going to be another trade. I mean, today in the room, we were talking a little bit, I think it was today, it might have been yesterday, but we were talking a little bit about chasing trades. And I mean, you never chase a trade. If you didn't get filled, let it go. Just let it go. There'll be another one. And, you know, if it's not in that market, it might be in another market. And, you know, I'm looking at 4 markets, and what I want you all to know, in addition to that, is when you start out, pick a market, maybe pick 2 markets. You don't have to have 4 like I got going on. I mean, I actually have more than 4. I think I have 10. But you don't have to do that. You know, learn the methodology and apply it.
Now the reason it's possible for one man to watch 4 markets or 10 markets is because we use the exact same methodology, the exact same indicators on every market, on every time frame. I know you've heard that, well, you can't trade gold the same way you trade the Russell, or you can't trade crude the same way you trade soybeans, because they all have different personalities. You know, and I won't even argue the point that they have different personalities. That's fine and that's okay, because when I'm trading, it's business and personalities don't really come into play. So whatever we do on the S&P, if I flip over to a Dow chart, I don't have to switch to my Dow hat. I'm going to look for the same setup, the same entry. I'm going to use it. If you took away this and took away this, and I was just staring at candles with our indicators, I could trade that, because it doesn't matter what that is or what these are. This is what matters. Now I'm going to switch it back to 30 minutes. Now that may sound, because you've heard the other story so many times about how you just can't do that. Well, we have years of radio archives that you can go watch anytime. Every day on the show, we recap every one of our alerts, both from the morning and all the stuff we do around the clock. And you can fast forward to the recap part of each radio show, and you'll clearly see how we do trade everything exactly the same. Okay.
And, you know, every now and then something odd happens at the beginning of the week, like this week. At the beginning of the week, we were down below our lowest weekly trading zone. And over the years, you know, that usually happens like 2 or 3 times a year, that at the beginning of the week, it's going to be that way. And this week, I suggested buying buying 31.75 calls when it was down. I mean, the market was just tanking. And when it was down there, I suggested buying 31.75 calls. And at the time, they were $75. And right now, they are, well, a minute ago, they were 300. But now they're 217.50. And that was Monday? Was it Monday I did that?
I think so, Michael. Now, that's just a little side thing. Our focus primarily is just we trade futures purely.
Yeah.
Only when there's these unusual circumstances that develop, like Michael just said, then Michael will share an option trade with the whole group, with all of our traders, and some take advantage of them and some, don't, but our core focus is trading futures, in particular the Emini Futures, but we do trade gold and crude. In fact, crude is Michael's favorite market. A lot of folks.
It is. And, crude is where today, if I'd have been totally focused on crude today, I could have made $1,000 a contract easy. But I wasn't, and I missed trades. And we did get, what's that, 1, 10, 12. Yeah, we did get a couple of good trades, and then I stopped out once, and then I ran out of time. And that's another thing to consider. How much time do you have to trade? When can you trade? All that kind of stuff. Now, there's a couple of questions in here that I wanted to answer.
What I just highlighted, folks, as Michael has explained this, I just want you to know that the candle I'm pointing at, that was this past Sunday night's Globex Open, 6 p.m. Eastern. That's when we start, and we just keep the pedal to the metal right up until Friday afternoon when the markets close for the week. So we'll pick up here when I start talking again about this, but first I want to hear what Michael has to say.
Okay, I just wanted to answer Tony's question because he directed it to me. A little bit about the proper account size for this type of trading, and also possible return include the commission. Well, okay, I don't keep track of the possible return. I mean, and that varies from person to person. The account size, when you start out, we recommend that you start out with a minimum of $5,000. You really don't need more than that in your account to start out, because you're not going to be trading 4 markets like me, so you're probably not going to have enough trades on to exceed the margin required. That would be more than 5,000. That's what we recommend. Now, we also recommend that you do it in demo until you have 10 consecutive days of profitability. Okay? We also recommend that you set a goal for the day. And when you reach that goal, you stop trading. Okay? And you can set the goal to whatever you want as long as you can consistently reach that goal. Okay.
And consistently stop when you reach the goal, because to be a consistently profitable trader, and more important than knowing when to get into a trade is having the discipline necessary to be a consistently profitable trader. So it's actually kind of, frustrating a bit. And you woke up, you're excited, you sit down, first trade coming out of the gate, bang, you hit your goal for the day. And it's like, now what? Because maybe you have a really good work ethic, you work really hard all your life. And then to suddenly be confronted with a situation where your day's done in 5 minutes, it's like, what do I do with myself? Okay?
Let me look at the spreadsheet.
That's part of the training. Yeah.
And see. Over the last month.
Do you want to grab the chart for a minute?
Well, okay.
If you want to, you don't have to.
No, I'll grab it for
just
a few minutes. But I got volunteered to do something at a basketball game tonight, so I gotta leave at 5. The game's at 5:30. So let me go through this.
Sure.
What screen am I showing right now?
I've got your charts up right now.
Okay. Well then, here. This is the amount of time it took me to get my goal. On the days that I did get my goal, this month and last month, and this goes back 6 years. Well, over 6 years, almost 7. But you know, when you get your goal after 7 minutes in your first trade, you know, what are you going to do with yourself? Or 22 minutes in your first trade, or 35 minutes in your first trade. You know, and last month I got the goal on the first trade, knock on wood, a bunch of times. And you know, December's usually really a good month.
Yes.
And you know, the last couple of days have been a little messy, but that's because of the news events that came out and all the pre-market activity. Excuse me. I'm sorry. Okay, that's, you know, when you have a whole bunch of pre-market activity, it's going to make the rest of the day kind of messy. But Tony, you have a link to that spreadsheet, right? So you can take a look at it. I'll give you all a link right now. Just go get it. Hang on.
Now,
go back.
Also keep in mind that what you see in the live training room, what you're learning in the live training room, that is rules-based. In other words, all the thinking has already been done. So you simply have to learn what to do, when you're supposed to do it, and then develop the discipline and the stones to do what you're supposed to do, when you're supposed to do it, without hesitation, without jumping the gun. You almost become like a robot in a good way, because again, the thinking's already been done. The decisions have already been made. When I'm confronted with this set of circumstances, this is what I do. End of story. Go ahead.
Okay. And where do you stop in case of loss? Do you mean how long do you trade if you're losing on a given day? I think that's what you mean. Okay, so yeah, well, the stop on every trade is going to be 8 ticks. Now 8 ticks is not based on a dollar value. It's based on 2 bar lengths, okay? Because if a trade's not going to make it in 2 bar lengths, it's usually not going to make it. So we limited it to 8 ticks, which is 2 bar lengths. On gold, that's $80. On the euro, it's 50. On crude, it's 80. And on the ES, it's 100. And we don't want to risk more than $100 per contract per trade doing the stuff that we do in the room. Now, you're not limited to the stuff that we do in the room. If you become a partner, and you know, there's just so many other things that you can do. I mean, like right here, the YBR was red. We got a down close. Bang. Would you know what to do with that? I don't know. But I know why the YBR is there. I know why it was red. And I know that typically is gonna work in your favor. Tony, it depends on your account size. You know, I'd start out with 1 contract. You'd be consecutive for 10 days in a row, and then, you know, well, after that, once you make $2,000, you add another contract. Then it becomes a monthly thing, and you can start adding contracts per month. I mean, we've got guys like Fuad who, you know, he's at 35 contracts right now, and his loss limit is $5,000 a day. But you know, at 35 contracts, that's 2 trades or 2 stop outs. Really.
We have what we call the 24/20 blueprint. It's designed to help you go from 1 to 20 contracts over a period of 24 months. Now, this is a very conservative model. In a perfect world, you could get there in 24 months, but if you live in a perfect world, I want to come stay at your house, because I don't live in a perfect world. I know that in my house, people get sick, people take vacations, and we all as traders hit rough patches in the road. So if you follow that blueprint, you're not going to get there sooner than 24 months. Chances are it'll take longer. And the bottom line is it simply takes as long as it takes. But as Michael was saying, when you first come aboard, we don't want you to start trading live right away. You shouldn't do that with any methodology. We want you to put together those 10 consecutive days in a row where you reach your daily goal in 10 trades or less. Once you've put those 10 consecutive days together, the blueprint gives you the green light to go live with one contract. We want you to stay with one until you increase your account balance by $2,000. This way, when you add your second contract, you're adding it with profit you earned in the market. Now that's a game changer. That first contract's got to be funded somehow. Maybe your wife loans you the money, or you got it under the mattress. Wherever it comes from, that's where it comes from. But then going forward, if you stay with the blueprint, every contract that you add will always be added with profit you earned in the market. And if you have 2 days back to back where you do not reach your goal in 10 trades or less, the blueprint is going to put you back in SIM. Now that's not a walk of shame. That's an intelligent business decision because something's not meshing. And so when that happens, the blueprint puts you back to SIM. You book a mentoring session with myself, with Michael, both of us. We go through every one of your trades with you. We dissect them, and we help you determine if it's something you did or you simply hit a flat spot in the market that was not conducive to trading, and you have not yet learned how to detect that kind of a market. So you just went ahead and kept trading. So it's not really your fault. It's because of the market that you didn't reach your goal those 2 days. And so out of that mentoring experience going forward, you'll know how to recognize when there's no opportunity. No methodology, no strategy, no system can make you profitable when there's no opportunity in the market. So our indicators will not only help you learn where to get in with the minimum amount of risk and the highest possible probability outcome, but it will also keep you out of the market when you shouldn't be putting on trades. Now, when you get to 5 contracts, okay, that's an important number. Start with 1, go to 2, earn the money. It becomes a calendar-based system, so you know on what day you'll be adding your 3rd contract and your 4th and your 5th, as long as things continue to go smoothly. Once you hit 5, if you're an S&P trader, 5 contracts, if you have a goal of 2 points a day, that's $500 a day. 2 points is $100 times 5 contracts, $500 on a 5-day week. It's $2,500. It's 10 grand a month, 120,000 a year. That's not going to make you rich, okay? But for most people, unless you've gotten yourself into a jam, it will provide you with enough money to pay your bills and put a little something away for a rainy day. Some people get very comfortable right there, so there's never any pressure, to keep adding. But again, some traders want to go big, and so we do it in a very, very measured, methodical, conservative type way with checks and balances all along the way. Now, I'm not going to tell you that using our methodology and our blueprint that you'll never blow up another account, because that would I would insult you if I said such a thing. But if you follow the rules, okay, you will have to work very hard and break a lot of rules to blow up an account with us. You're going to have to go against the grain, because see, every time you have those 2 days back to back where you don't make goal in 10 trades or less, you're going back to SIM if you're following the rules. And with us, unlike most traders out there, trading is a very lonely business. So when you have a rough day or you hit a rough patch and you just legitimately don't understand what went wrong because you followed the rules, you did everything you were taught to do, but your P&L is red, not green. with us, and this is really what our traders, one of the things that they like so much, is we have a community family. We have a Telegram discussion channel apart from the alert channels. There's always somebody there to talk to. There's always somebody there with more experience than you, and they're going to speak the same language. In other words, if you're trading the CFRN methodology and you strike up a conversation with someone in the discussion group, you're not going to hear about stochastics and MACDs and Bollinger Bands, and I'm not putting those things down. I'm sure every one of those tools does exactly what it was created to do, but they just aren't part of our methodology. So what you'll hear is people speaking our language, using the names that we've given stuff, and that makes for an experience not only conducive to your personal growth as a trader, but just kind of a sense of comfort, knowing that you're not alone anymore. Now, there are those folks in the Telegram channel, and Michael and I and Valerie, we're there too most of the time, but then you can additionally book that official mentoring session. And as a passport holder, it doesn't cost you anything. Okay, you just go to the mentoring page, find a day and a time convenient for you, you book it yourself, and then you and I, or you and Michael, we meet up in an environment just like this. The only difference is there's just two of us, and we both have open mics so that we can carry on a conversation and you don't have to type questions. Most new traders will spend, you know, at least one session with me a week in the beginning. Then it becomes, you know, every other week, and then every 3 or 4 weeks. Whenever you need help, help's there. Back to you, Michael.
Okay. Yeah, I'm running out of time, but
all right, buddy. Well, say what you want to say, and then I'm going to walk them through some trades from that we've done this week.
okay. Yeah, everything Dwayne said is true, and I want to answer Scott's question. How does newbie get the rules-based discipline? Is it learning over time, or is there a manual? We have stuff that's printed out, just screenshots. I mean, because we want to minimize the learning curve. We want to minimize the learning curve for you. And, you know, you can come into the room and just watch me and listen to me. And, I mean, you really got to listen to the words that I say, because I say the same thing. Well, they're not exactly the same words, it's different price levels, but I say the same thing over and over and over and over and over again. And once you understand, you know, I was talking to someone yesterday who said, you know, it seems like a steep learning curve, but it's not. I mean, you know, we had a fella, he was 70, 72, 73 years old, something like that.
Yep.
Went and put something out on YouTube, just randomly. Went and put something out on YouTube about once you get over the learning curve, then it's easy. And you know, it should be boring to you. Really. I mean, I know there's so many emotions and there's so many emotions and everything that can be built into this, but you really can't have that. I mean, in the morning, do you hear me having emotions?
No, when you come into the room, you can't tell if he's got his goal for the day or not. You can't tell if he's having a good day or a rough day, because of we approach it kind of, you know, not like a fighter pilot, but more like a librarian. I mean, it's a job. You show up, you do the job.
That's it.
You focus on the job. Your mind's not filled with that new sports car you're going to be driving or the new house you're going to build. No. When you sit down to trade, it needs to be with 100% of your focus. Because once you have a methodology that allows you to be consistently profitable, you know, on a typical day, it's not going to take you more than half hour to reach your daily goal. Now, that's not going to happen every day. There are going to be days you get stopped out 2-3 times right out of the gate. But once you understand how markets work, that doesn't freak you out. That doesn't scare you. See, most traders wake up, new traders wake up in the morning with a knot in their stomach, wondering, oh my God, I wonder if it will work today. You know, it's the day of the day I'm going to blow up my account again and blow up my business. Once you understand how markets work, once you accept that it's a business based on probabilities, and when you realize, not with your head, but with your heart, that you have a truly definable edge, then it's just a matter of sitting down, putting on and taking off trades. Put them on, take them off, put them on, take them off until you reach your goal for the day and put the mouse away. Down the road, if you choose to trade bell to bell, you can, all right? But what you're really going to find over time is that you'll never feel compelled to trade. Now, folks who still trade stocks, equities, there's a bit of a ball and chain. Your opportunity exists between 9:30 a.m. Eastern and 4 p.m. Eastern, Monday through Friday. We, on the other hand, have the luxury of starting our week Sunday night, 6 p.m. Eastern, all the way up until Friday afternoon, 5 p.m. Eastern. There's no clock to be punched. There's no quote-unquote market hours. They do close for an hour each day, Monday through Thursday from 5 p.m. Eastern to 6 p.m. Eastern. They have to sweep, empty the ashtrays, that kind of thing, you know. And then we're back to work an hour later at 6. So that compulsion or feeling compelled to trade goes away. What you're simply watching for, you're observing the markets until opportunity presents itself. In the beginning, you'll know that opportunity just presented itself because your phone or your tablet or your computer will go dee dee dee. That's the sound of telegram. When you hear dee dee dee, if you have your trading hat on, you get up out of your lazy boy or wherever you happen to be, you go to your office where your trading platform is, you sit down, you look at the chart. I never want you to trade one of my alerts just because it's an alert. I want you to look at the chart. I want you to see the setup that's developing in front of your eyes, the setup that we've taught you over and over, day after day. And then you trade it, you manage it, you exit. And there's no compulsion to immediately put on another trade unless there's another opportunity staring you in the face. Now, because we use the same method and the same indicators to trade every market, it increases the number of opportunities that you have at your disposal on any given day. The Dow might be moving right now. There might be a perfect setup in the Dow. Okay, I'll trade that. But as I scan across my charts, I might see that, well, the opportunity right now is in crude. So I don't have to change anything. I don't have to put on a different hat. I just trade the crude opportunity that's in front of me. I know you got to run, Michael, so I'm going to grab the charts back here.
Okay.
Unless you got something else you want to show real quick.
You know what I want to show?
Go ahead.
This. 8 years under Obama, 4 million jobs lost, unemployment peaked to 9.9%, GDP down 2.8. 2.5 years under Trump, 5.1 million jobs gained. Unemployment fell to 3.6 and GDP up to 3.2%. I just wanted to show that.
Okay. All right. Thank you. Let me grab the charts.
Okay. Yeah, grab the charts. If anybody has any questions about anything, like there was one thing that, hang on, let me bring the question box back up. Scott, there was one thing that you had asked about the slingshot. Well, everything we have on our charts is proprietary, and the slingshot itself, when you start out with us, you're really only interested in the green line and the cycle. Okay, keep that brown line in there because there are other trade setups that you can learn later on that use the brown line. In the black step line, you know, up on price in the room in the morning is only used to disqualify trades, okay? But there are other trades that it's an entry position. And about TradeStation, you know, Dwayne and I are both certified TradeStation developers. And we have the stuff on TradeStation, but it's just too easy to hack. So the way around that is, you know, to just open up a brokerage account somewhere that has Gain Capital as the FCM. And there's a bunch of them. We recommend Daniels Trading, but there's a bunch of them. And, you know, you can put the money in, and then you'll have charts for demo, or you'll have live charts, actually, if you put the money in.
Then you can run our indicators on. Now, Gain Capital is one of the largest clearinghouses, right up there with R.J. O'Brien. And the list is very lengthy. You find a broker that clears through Gain Capital, and you'll have access to a platform that looks identical to this. It won't have the DT logo up in the corner. It will have the logo of whatever particular broker you decide to do business with.
Yeah, and you know, the commissions vary from place to place. You know, I used to use TradeStation all the time, and the slippage was horrible in TradeStation. And then we found Bert. And
our broker, I think I mentioned this earlier, but we don't get a finder's fee if you open an account with Daniels. If you trade with them, we don't get some, you know, sliver of the commissions every time you place a trade. Not that that's, you know, bad or illegal, but we just don't want to muddy the water. We want to be able to tell you this company and this man are the best we can find, simply because we really believe that. Our broker, Bert, great guy, he uses our methodology, our indicators. He's been at this a lot longer than we have. He uses our methodology to trade his own personal account. So when you call and need help, he speaks your language. He knows what's going on. But again, you pick whatever broker works for you, as long as they clear through Gain. Now, the indicators are coming to TradingView and Thinkorswim at some point, but you know what? We're in no rush to do that, because there's enough brokers out there right now where our indicators do run, and you can get all the help you need. Okay.
And you know what? Even if you don't have an account at Daniels, you just call Bert and he'll still talk to you about it.
Absolutely.
You know,
yeah.
He'll still do it.
He's friendly. Now, I've highlighted the Sunday night Globex Open, 6 p.m. this past Sunday night. You can see the price open right in a weekly trading zone. Price from 6 p.m. Sunday night to Friday afternoon, price is always on the move. It's always trying to go somewhere. There are occasional periods of time where it consolidates and goes sideways, but it's always moving. Wouldn't it be nice to know where it's trying to go? Well, that's what the zones do. They provide you with a framework. Here's the open, okay? Once price gets above this zone, that's the market telling us that it's trying to get to the zone overhead. And you can see what happened. It went to the zone overhead. Now, only three things happen when price gets to a zone. The most likely thing is consolidation. You see it there. You see it there. Okay. These are 30-minute candles. So 1, 2, 3, 4, 5. So 2.5 hours we consolidated. Okay. When price cannot get through resistance, and as price approaches the zone from below, we expect it to be good resistance until it isn't. Once the market realizes there just aren't enough buyers in the order flow to move it higher, it's like the little Mario guy. He's going to turn around and go the other direction, okay, which means the zone below. That's exactly what happened. So when price gets to this zone, what do we expect? Consolidation. Only three things can happen: consolidation, rejection, Rejection is the second most likely thing. And this is rejection. When this 30-minute candle closed, now at one point in the life of this 30-minute candle, it was just a big red candle. But by the time the candle closed, there was nothing but wick touching the zone. Price was rejected. The third thing that can happen is called the slice. That's when price slices through a zone like it's not even there. There is a special characteristic to a slice that I will show you in a moment, but I want to keep this just real simple right here. So Sunday night, we open into a zone, we consolidate, we move to the zone overhead, we can't get through it, we consolidate, we return to the zone from whence we came, again we consolidate, and then in one 30-minute candle, we actually move from one zone to the zone below. Now this zone up here, 3146 to 55, that's 9 points, $50 a point, $450 per contract traded. So that's 450 up, 450 back down. Now that the market's back to this zone, it's got to go through that same process again. Consolidate, but not like I think of it as the market thinking about what it's going to do next. What it's really doing is assessing the order flow. Do I have more buyers or sellers? If there are more buyers than sellers in the order flow, price is going up. If there's more sellers, price is going down. And that's what happened. We dropped to the zone below, and in that case, we sliced through it. Okay?
Okay. I got to run.
All right, buddy.
Okay.
Have a great weekend. I'll talk to you over the weekend.
Great weekend. Okay, sounds good.
Thanks so much.
All right.
All right. So we dropped through this zone. Once this 30-minute candle closes below this zone, that's the market saying, I'm going to try to get to the zone below. Now, does the market always accomplish what it's trying to do? No, sometimes obstacles get in the way. So we come down to the zone. Once again, we get rejected, right? Then we make another move, and we get this. The next zone below, and this was the lowest weekly trading zone for this week, but price could not get there. Why? Let's scrunch up a little bit. Okay, let me try to get it so you can see it all. That's pretty good. Okay, so we get to this zone. I can't see that right. Hang on. Okay. Sunday night, zone to zone to zone to zone. Zone. This is wide-ranging consolidation, okay? Typically, the consolidation looks a little more like that or like that. But in times of, larger than normal volatility, there'll be this. Now, let's look at the price where this happened. Okay, the zone itself is 3118/19. So if we look left, if we go back, we're going to find at 3118/19, 2 weeks ago, we had a gap higher open on a Sunday night, right here, pretty decent gap. Now, we gapped up and see that consolidation? Okay, so over here, it appears, or actually the swing low here, the zone's 3118.19, 3112, swing low here, 3107. So let's go back and look at that gap again. $31.12. I hope you see this. I hope you get it. Let me see if I can make it a little clearer. Okay. This was on a Friday, right? right? Sunday night, we gap higher. Now, if I can keep my line straight, here we go. Just going to keep going straight across. It'll be worth it once we finally get there. Now, is there any reason, since the zone couldn't hold it, is there any surprise why price did what it did? No. It's purely logical. That's why we call the alert service LOGIC247, because there's no mystery, okay? There's no black box stuff. I know there's people out there that'll say, you know, support and resistance. Oh man, that's so, you know, 2001. That's so old-fashioned. You know, there's algorithms now and all kind of super duper stuff. You can't. That's for losers. Really? Okay. Price comes through that zone. The zone can't hold it, so it goes to the next logical place where it's going to find support. Now, when the market finds support and cannot get through it, that's going to send it back up to resistance. When price approaches the zone from below, you have to expect it to be good resistance. Resistance will send the market back to support. Support will send the market back to resistance. This time we actually pop up. We get above that. It looks for all the world like we're making that run to the zone overhead. Okay, now I'm going to apply our indicators. Our indicators are very simple. We have our own names for them because you got to call it something. All right, now watch this. On this move, the green line falling, we call it BBC. That means bull bear cross. The reason we call it that is because it explains what it does. When price gets above it, we're bullish and we anticipate higher prices until price gets below it. Once price gets below it, we anticipate lower prices until, you already figured it out, until price gets back above it. See, there's just a little head fake right here. So we had a leg and a retracement. So we overshot. We overshot this resistance. What time of day did this happen? This was, the move took place 2 o'clock in the afternoon, December 2nd. Price comes back down to that area we defined as support. Support that can't be taken out will send you back to resistance. Resistance here is the BBC and the weekly trading zone. So now we have good resistance times 2, because we expect both of these to hold until they don't. So what do? We consolidate at the zone. Price begins to move lower. We had a trade alert for all of our traders. Every one of our traders got this. Sell 31.16. The target on that trade was 31.01. Why? Because that's the weekly trading zone below. And we expect a weekly trading zone to be good support when price drops to it. And you can see what happened. It got to support, gave us a bounce to this CFMA1. You'll hear me call this red and falling because it just describes what you see. So from 31.16, we get to our target down at 31.01. Yeah, miss it by a couple ticks. Remember, zones are an area. Often it turns on a dime. Sometimes it may come up a few ticks shy. Now, this was, if I'm not mistaken, a swing alert. This was a concierge trade alert. Now, I explained a few minutes ago, Valerie's going to send you a spec sheet after this webinar that will really clarify some of the things that we've talked about, okay? So as long as price is below the green line, we continue to anticipate lower prices. So let's see what happened here. Price continues down. We hit the zone. We bounce. We had an alert to be short 31.16 and then another alert to be short 31.05. I mentioned that important prices, important areas are almost always tested. So from 31.05, we dropped to 31.01 and a half. Beautiful trade. Price then gets back above the trigger, does it again. This time we actually slice through that zone. When that happens, that's the market telling us it's trying to get to the zone below. Now, when a move begins to run out of steam on an extended move like this, price will start to walk sideways. Okay, this black line, the step line it's called, when it crosses over, you see how it steps down, steps over, steps down, steps over? They call it step line. But right here, things change. We step over, step down, step over, and then we keep stepping over. So in a nutshell, the exit signal is 30.81. On a short trade, once the step line crosses over, the first green candle that closes above the step line, that's the exit signal. So from 31.16 to 30.81, that's a $1,750 per contract move. From the published entry to the exit signal given to you by the chart. See, getting an exit signal from the actual chart, from the market itself, is so much better than getting it from some joker on the internet or some crystal ball or, you know, rolling the dice. People do all kinds of things. Learn to let the market tell you what's in your best interest. Now, this was the swing low. If you got out at the swing low, that would have made you more money than the exit signal. But you have to understand, the exit signal is not known by anyone until after the fact. Everybody with me on that? Any questions? All right, market starts to walk sideways. Step line crosses. Green candle closes above. You're out. If you've earned the right to trade 10 contracts, you can do the math. 5. But please, whatever you do, I don't care whose methodology you use to learn how to trade, do not put live money in the market until you're consistently profitable. Our measuring stick, 10 consecutive days. Only go live with one. And I don't care if you're on your 99th contract, do not bump it to 100 until you've earned that extra money to pay for that contract that you're adding. When price pulls up here to this BBC, we expect it to be good resistance, and as you can see, it is. We consolidate. Price will consolidate at the BBC just like it consolidates at a weekly trading zone. Okay. Right here, the market says, I'm ready now to make another run at the zone below. This price channel, during the week as it was developing, it was important. But it just makes my screen look a little right now. Okay. We had a trade to be long, 30.98. You can see what happened. We had a trade right here to be short. You can also see what happened. That resulted in a stop out. Okay. That's the truth about markets. There is no methodology that can prevent you from experiencing the inevitable stop out. I know there's lots of websites that promise to be able to predict the future, but you know from your own experience, they can't. I'll tell you why. Back in the day, when God created Adam, he put all kinds of good stuff in Adam, but he did not give him the ability to change the past or to know the future. And those two things are inextricably linked for eternity. There are traders who will never become consistently profitable, professional traders because they won't accept what I just said. Man cannot know the future, but good news, man can know what the next high probability move is. Just as we did here. And you'll see one after the other after the other. Now, you can learn from textbooks, you can learn from watching videos, but you see, every one of our traders got a dee at 3098, and they knew exactly what to do with it. There was a immediate or initial target at the zone 3100. Okay, that's 2 points. That's a daily goal, right? But the trade to target is the zone overhead. As long as price stays above the BBC, we anticipate higher prices. You're probably already catching on. Man, that dude just keeps saying the same thing over and over. Because those are the rules by which we live, by which we trade, and they don't change. From here to here. When price can't get through resistance, it's going to turn around and go the other way. When it gets to the BBC, we expect that to be good support. Here we go with the consolidation again. Price consolidates at the BBC just like it does at the weekly trading zone and like it does at trigger points. Okay. Now, I told you that our indicators will help you stay out of trades. Look at what happens here. Price, we know we're coming into support. We anticipate this consolidation. We don't know how long it will last. Price is above the BBC. Oh, we expect higher prices. Then it's below. Oh, wait, lower prices. No higher, no lower, no higher. Now remember, this was a big green candle at one point. No lower, no. You see, now how long did that last? These are 30-minute candles. So there's 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7 hours, 8 hours that we consolidated. Now, anyone can look like a genius with a historic chart, but you don't have to be a genius to see this. There's no opportunity here. This is the type of market that will annihilate your account. You have a good couple weeks, a good couple months, you're feeling real good about life. You get caught up in this and you don't understand how markets work. You don't understand what's going on. For this 8 hours, go walk the dog, make a really big sandwich, get some rest, love your wife, do what matters, do what's important, because there's no opportunity here. Your patience always pays off. This was red and falling. That represents resistance. The green line, when approached from above, represents support. So you have two conflicting forces here. Back here, we said higher prices, got it, pulled back to support, consolidated. When the CFMA1 turns blue, see blue and climbing represents higher prices. So when this candle closed above the highs of these candles, that created a window of opportunity where above those highs, the consolidation highs, this spike high here, it's not a big window of opportunity, but it is a window nonetheless. Now, you could get long here, and you don't have to jump out just because you get to this swing high. Look at your chart, okay? Because these are 30-minute candles. You don't have to look at them every 30 seconds. What does price do when it comes out of this 8 hours of consolidation? It does what it originally set out to do, and that's to get to the zone overhead. It did it beautifully. And then what do? We consolidate for an hour, 2 hours, 3 hours, okay? Then we pop above, but we don't go too far. Now there is 2.25 points available, and if your goal is 2 points a day, okay, great. But let's do this. You see this swing high here? Okay. When the market moved up here, it did not take out that swing high. So drawing a rectangle from that swing high that has not been challenged. So when I put my traders into this long, did I realize that it would quite probably be only a 2-point trade? Yes, and they understood it too because I teach them that, okay? Now, when price can't get through resistance, what's it going to do? It's going to look for support. We dropped through support. Why did we stop dropping here? Why didn't we go all the way to the zone? Crazy little thing called support. Okay. Now, that's an outlier. That's a spike. It was a big red candle. If you were in it, there was certainly opportunity to get your couple points for the day if that's just all you're looking for. When price can't get through the support, there's only one place for it to go, back to resistance. Now, price got to the zone, it consolidated for 1, 2, 3 hours, popped up to an area that we knew would most likely be good resistance. That sent us back to our good support at the weekly trading zone and the BBC. What happens then? We attempt to move higher. That same obstacle turns us away. But as we pull back to support, the support holds. So that sends us up to the next obstacle that we've already identified. Price then pings back and forth from resistance to support, to resistance to support. There's going to be a winner here, okay? You just have to be disciplined enough to not get chopped up in this mess, okay? Remember, as long as price is above the green line, you continue to anticipate higher prices. This candle here, we had an alert by 31.29. Once price took out these highs, there's our trigger, and that trigger took us to the initial target overhead, 31.33. It's a 4-point move, $200 per contract. But look what we did. We sailed right through it like it wasn't even there. Never jump out of a perfectly good trade just because you've reached some arbitrary number, okay? I will teach you to read the chart like a newspaper. That's what I teach all my traders, okay? Now, once we sail through this obstacle that we already know about, we don't know we're going to sail through it until it happens. We're prepared to do whatever's necessary to protect our position. Long at 31.29, there's 4 points in the bag, 5 points in the bag. Here comes this final obstacle. Okay, it takes 30, 45 minutes. But right here, it becomes crystal clear to all of our traders. Price is now trying to get to where the zone overhead. So that's 31.39 up to 31.45. There's another 6 S&P points, $300 per contract traded. Now remember, I told you that when a move runs out of steam, first thing that's going to happen price is going to start to walk sideways. There it is again. See how the step lines on the left side are blue and climbing? See how it crossed over right here? Where's the exit signal? Right there. Because it's a long trade. Once we cross over, the first red candle that closes below the step line, that is the exit signal, okay? Now, during the radio show today, I said we don't have an exit signal yet, but that's changed. Now we do have an exit signal. Guys, I'm so sorry, but I must put you on hold for just 1 second. That's the wife, so it got to be important. Hang on. That was my wife. She just got one of those telemarketing scam calls about your Social Security benefits. There's suspicious activity, and it's going to be suspended. Please don't fall for that, folks. I know people, bright, intelligent people. I even know a wonderful couple. They were school teachers. They fell for something so similar to that, and ultimately they lost a lot of money. If you have, a family member, I don't know, a parent or just someone, or a close friend, a neighbor, right, getting a little up in age, make sure they're aware of these kind of things and make sure they don't fall for them, okay? All right, back to the task at hand. The exit signal, as I just pointed out, clearly prints on the chart. It won't get you out of the swing high or swing low for the reasons previously explained, but it does a real good job of getting you out in the neighborhood. Okay, this one did really quite a good job. The swing high, it looks like, was 31.51. The exit signal got you out at 31.50.50. Okay, I just walked you through an entire week of the S&P. Let me show you what these Concierge Trade Alerts. You know what? No. I'm going to go to the questions. Let's see what questions have not been answered. I don't want to keep you here all day, but I also want to make sure every question gets answered. How does a newbie get the rules-based discipline? Is it learning over time, or is there a manual? Both. Anyone who becomes a partner, you and I are going to become very familiar with each other. Number one, you're going to communicate with me pretty much around the clock through our Telegram channels. We have private discussion channels. We have the Concierge private channel for the alerts, also the LOGIC. I'm going to share those here in just a second. Now, I said something in the email to get your attention. I said, you're probably wondering, and you should, okay, dude, if you're so smart and you know how to do all this, and you always know what the next high probability move is, why are you wasting your time teaching somebody like me how to trade when you could just be trading and making a lot more money than what you're charging me to learn how to trade? That's a very valid question. And when you ask that question, you should listen very carefully to the answer. A lot of times the answer you hear is something along the lines of, oh, God's been so good to me, I just want to give back. Now, there's nothing wrong with that if it's genuine, right? Or maybe it's, And if it's an agnostic person, they might just say, "Oh, the market's been so good to me, I just want to give back." Again, it's very noble if it's genuine. Unfortunately, sometimes I feel like when I've heard it, it just wasn't genuine. It was somebody making a feeble excuse because they don't know how to trade. So they, quote unquote, teach people how to trade. I'll tell you why Michael and I do it. It's an income stream. There it is. It's all about the money. It's a bit, come on, it's about a little more than money. Hear me out. If you've ever read a book by someone who is wealthy, typically someone who's generationally wealthy, in other words, they inherited it and didn't have to work for it so much, but anyone who's truly wealthy that's written a book, there'll be a section in there that teaches you the importance of having multiple income streams. Because no matter what you do and how good you are at it, things can change. Maybe the thing that you're really good at doing becomes illegal, or something happens and you become physically disabled, and so whatever that thing is, you can't do anymore. Biblically, it is suggested that a wise man, a good steward, will have 7 streams of income. That's in the book, and I didn't write it, but I have read it a lot. Okay? So Michael and I, when we struggled to learn how to trade, we did have conversations like, man, if we can ever figure this thing out, let's try to help other people without ripping their eyes out. And so we both agreed that that was a noble thing and that we would do that. Okay? But a lot of people come through our doors. When you first come through our door, you are an income stream. You are a deposit in my bank account. Because we give our partners one-on-one mentoring, as I just said, you and I are going to spend a lot of time together to whatever degree you need my help in understanding what we teach. I like to think of myself as a pretty nice guy. And so when I encounter another nice person who speaks the same language I do, because as I said, trading can be a very lonely business. As you and I spend these 45-minute sessions together, week after week, we get to know each other. I know your wife's name. I might know your kid's name. When I hear a dog barking in the background, I might even know which one it is. And the same's true for you and me. My wife has 6 dogs. Okay? All right. So, first, you're just an income stream. That's the brutal truth. Because I believe in that concept, both from a wealth perspective and from a biblical perspective. In fact, I'm this close to opening a wholesale grocery outlet here out by South Mountain because it's a great business model and there is no competition within about a 25-mile radius. All right. But it's best if you can develop multiple income streams in whatever field of endeavor that you excel at. Okay. So if I can trade, that's an income stream. If I can teach other people how to trade, that's an income stream. If I write a book, which becomes wildly popular, due out next spring, called Trading in the Spirit, I hope that's going to become an income stream because I've committed 50% of the net profits to the orphanage that my wife and I built in Kampala, Uganda, East Africa, a place that you're welcome to go to anytime that you want to take a missions trip if you're that kind of a person. So rather than blow smoke up your chimney and convince you that we're just trying to give back, well, we do like helping people. If you've ever helped someone, then you know that that makes you feel good. In fact, I've had people tell me, man, you think you're all that in a bag of chips. Dude, only reason you help people is because it makes you feel good. Really? You know what? I think I can live with that. If I see someone in need, I can help them, and it enhances the quality of their life in some way. If it enhances the quality of their life in some way, makes them feel good, and as a result, I also feel good, then guilty is charged. You're an income stream. If things go well, you'll become a friend. You'll be someone that we consider part of the family. And ultimately, you'll determine that by how much you want to contribute, how much a part of the community you want to be. I've got hundreds of traders who have come through our doors, learned how to trade. They're doing well, but I never hear from them. I guess they just didn't like me as much as I like them. And that's okay. I'm not mad. They paid for something. They took what I taught them, and now they're out there doing it. Other people lean more towards the community. They learn what I teach them. They're successful at it, but they like having somebody to hang out with and talk to, and they like the peace of mind of knowing that, well, they need help, it's there. Okay? So that's why I do what I do. It's the truth, so I'm sticking to it. All right, back to the questions. The rules, how do you get it down? By hanging out with me, by coming in the room every day. If your job doesn't permit you to be in the room every morning, come when you can. If you can't, we'll record some sessions for you so that when you come home from work, you can listen to them. But you know what? If I record you 5 2-hour sessions, you don't really need any more, because you're going to find that it's just the same thing every day, over and over and over. Nothing changes. The only thing that changes is the date on the calendar and whatever price we happen to be trading at right now. Todd says, I am attracted to gradual price climbs, but a large percentage of my stop outs is coming at the high of the day mark. I leave 4 ticks room before getting in, but I still am getting chewed up in the 10 to 15 tick pullbacks as it continues upward. Any advice would be appreciated. Okay, Todd, I'll show you one little thing here, and most trading platforms have this, okay? On this platform, the DT Pro, insert indicators, volatility, average true range. On most platforms, the default setting is 14, okay? Now, what that means is that it's looking back at the last 14 candles. I can change this number to any number that I want, okay? So now it's going to look at the last 21 candles. It's going to look at the high price of every candle, the low price of every candle, and then it's going to give me what the average range is. Okay, you can use it on a 30-minute chart, on a daily chart, on a 5-minute chart. If I had put it right here on this 30-minute, when the market's closed today, based on the last 21 30-minute candles, the average range, top to bottom, 3.5 points. So if I put on a trade that has a stop loss less than 3.5, very good possibility that I'm going to get stopped out. Now, if I go to a smaller time frame, like say a 5-minute, see how the number changed? So what we're looking at now is we're looking at the last 21 5-minute candles. And you see how we have some really big ones, we got some small ones, but the average range over the last 21 is 1.5. So if I'm trading a 5-minute chart, what a good rule of thumb would be 1.5 times. So if my reading is we'll call it 1.5. If I add, let's see, half of 1.5, here, let's make it 1.6. Let's say it's 1.6. So half of that is 8. So 1.5 times would be, yeah, I'd probably go 2.5 right here. 1.5, so double it would be 3. Does that make sense? Let me just check down here and see if. Sometimes I over-explain stuff. Sometimes I under-explain it. I'm not always sure. Ron, I see your question at the bottom while I'm looking for something from Todd. What are the room hours? The room hours are 9:30 a.m. to 11:30 a.m. Eastern. But we're around all the time. The radio show is with charts is from noon to 2 p.m. Eastern, Monday through Friday. But there's almost always someone in Telegram hanging out, whether it's just one of our traders or one of the administrative people, myself, Michael, Valerie. Okay. Todd, did that help you? Does this average true range help you? Now, let me show you this, Todd. Let's say I was going to get short right here, okay, on this 5-minute chart. Using market structure, where does my stop loss need to be? I don't want to use an arbitrary number because I've graduated beyond that, okay? Now let me use, I could use any example, but right here, bearish cross. That's something you'll learn. It's very important. It's a core part of the methodology. We have a leg, a retracement, okay? So I'm gonna let price pull back. And as we start to move lower, okay, if I get short this market,
good job.
I'm gonna put my stop loss right there. Now I hear somebody in the background with an open mic. I don't know who that is, but I'm gonna go ahead and close that just to be safe.
Muted.
I apologize if I'm cutting somebody off. Just tell me in the chat box and I'll turn you back on. All right, did that help you?
Unmuted.
Todd? Sorry, I had to step away. My recorder's on. If you get to my question, I did. I taught you just now how to use the average true range. That gives you an idea. A good rule of thumb, your stop loss should be about 1.5 times the average true range of whatever time frame you're executing on. But what I'm really going to work with you on, what I'm going to teach you and what's going to really help you is learning to read the chart and let the chart tell you. See, let's say I had, no, let's not talk about an alert because you're going to move beyond the alerts. See, the purpose of the alert is when an actual opportunity presents itself in the market. The telegram sound will go off. You'll go to your chart. I want you to see this as it develops. It's one thing to see examples in a textbook or watch some guy doing it on a video. But when you're sitting there live in real time, seeing it happen before your eyes, that's a learning experience that you're going to walk away from that owning that information, okay? Now, I said everything we do is fluid across all markets and all time frames. So let me make sure I just give you an example of that. Price can't get any higher. This happened just today, right? December 6th. Yeah. So shrink this up. 55, 56, that's a zone we did not get to. So price gets above this zone. That tells us it's trying to get to the zone above. We see weakness here with this black step line crossing. So now okay, price is trying to pull back to support at the BBC, but there's still some buoyancy in the market. Buyers push it up, and then we get this double top right here, which turns into a triple top, which turns into that, okay? Price goes from resistance to support, to resistance, to support, bearish cross, leg, retrace. If you were trading this without any kind of an alert from me, okay, once this pullback is complete, I'll give you two options. You can get short on the open of the next candle, or you can get short when price takes out the low of that candle. So what is that, 31.48? So you get short 31.48, but you know it's probably only because you've got a weekly trading zone. And when price comes down to a zone, you expect it to be good support. And it was. It held. You print a green candle. As you take out this high of this previous candle, well, I know that if I get long right here, the BBC may be resistance just like it was here. So I'm going to make the market prove itself. How do I do that? I want to see a candle close above the BBC. So now I'm long on this candle, 31.49, and it takes me up to a swing high at 31.50 half. Okay? Resistance, 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 resistance. Once it hits resistance, what am I looking for? A move back to support. When I find my support, a move to resistance. Now, when it starts to pinch down like this, okay, when there isn't at least 2 points of opportunity, 2 points of room to run, as we call it, just leave it alone, because you'll just throw your money away. And there's too much opportunity, too many times a day, in too many markets to ever trade anything less than an absolute high probability trade. Okay. Now, all right, more questions. I noticed you're using a 30-minute chart. However, earlier I heard 4 ticks is the range chart. Yes, Scott. We train you on the range chart because of the symmetry that it provides. And if you listen to the video later, you'll hear Michael go into some more detail about why. But let me just show you the symmetry real quick. Every candle is exactly 4 ticks tall. So in the beginning, as you're learning this core methodology, we don't even want you to have to worry about the stop loss at this point. We're trying to teach you the setup. So you always use an 8-tick hard stop on every market as you're learning the methodology. Once you've learned the methodology, you may do as I do. I look at a 30-minute chart. That's my go-to chart. Now, once I'm ready to get long, what have we done? Well, we had a $1,000 per contract move off that alert today. I gave my traders instructions to consider being long 31.29. Initial target was 33. Next target was 45. And the next target, as you can see, we did not get to. Resistance, resistance, resistance. But now we've pulled back to support. We're above the BBC. I expect higher prices. The only problem is I have an obstacle between me here and the target overhead. There's 2 obstacles, red and falling, and 1, 2, 3 30-minute attempts to get through that area. So that's a pretty good resistance. If I get long here, let's say I take an entry at 31.47. Now I better make that 48. 31.48 to 31.50. That is a beautiful, absolutely beautiful 2-point opportunity. What I can't do is fool myself into thinking that it's just going to fly right up to the zone overhead. It's going to encounter resistance here. Now, the market encounters resistance and support over and over all day, Sometimes it overcomes it, and sometimes it doesn't. Maybe it doesn't on the first chance or the first time up, and maybe the second time it does. So here's what I could do. I could get long here, knowing this is an obstacle. So I'm going to be attentive and actually watching this trade develop. I'll be prepared to take profit here if the market shows me weakness on a smaller time frame, or I could wait for price to get above the obstacle, and I might put out an alert, or I might just trade 31.52 to 31.55, 3-point move. This is a higher probability, even though there's an obstacle, than this. Why? Because price has already done this. The market has a great memory. It's comfortable being where it's been before. So for this thing to just, pop right up to 31.50, pretty simple little trade. This is rarefied air, to use a term. Could you shoot for the whole thing, go zone to zone? Sure, you just got to be cognizant as you approach the obstacle. Are you going to bring your target down to take you out? Don't exit at market, because you'll always get slippage. And if you're trading 10, 20, 30 contracts, that can get expensive, okay? Or am I going to manually just move my stop loss up right behind it, knowing that trailing that closely, there's a high probability I'll get stopped out. But if I don't, bang. From 31.46 to 31.55, that's 9 S&P points, $50 a point, 450 per contract traded. Okay. Now here's the crude chart. Okay, let me scrunch it up. This is what price does, day in, day out. Once we get into this zone, we go from zone, up to the zone, down to the zone, up to the zone, down to the zone, up to the zone. We spiked this one. Let's see if we have a zone above that. 59. The next overhead zone, what do we got here? 58.50. Let's see, 57. Now these are published every Monday morning. So there's 57. I guess I didn't update this one yet. On the radio show, I only display last week's zones up until Thursday, in fairness to the partners and passport holders. And then on Thursday, I just open it up for everybody. So let me scoot back here, because I know a lot of people like trade crude. December 1st. Okay. Sunday night, Globex open right there. This was a Friday trade, okay, a week ago today. I told my traders to get short here on Concierge, and then I told them to get short here. I think it was on the LOGIC, okay. So basically we went from 57.90, well, from 57.90 to 56.90, that's $1,000 per contract, down to 55.90 right there, makes it, it's a $2,000 per contract move. Once price gets to support that it can't get through, it's going to send it up to resistance that it can't get through. When it can't get through, it's going to go looking for support, okay? We had a trigger to go short here that never got triggered. Why did it stop here? Why didn't it go all the way? The answer's right there. The chart can answer your questions usually better than I can. Support to resistance to support to resistance to support to to resistance. Now the indicators, remember, as long as price is above that green line, you expect higher prices. So you never would think about going short anywhere in here, simply because you're above the green line. You're only going to entertain long trades until price gets below. And then once it gets back above, this was a trade from today. Told my traders last night to get long, 58.70 at 59.70, $1,000 per contract traded. And then we just roll sideways into the close. Now, everything I've shown you, it's the same on the Dow, zone to zone, same on the Russell, okay? There's soybeans, gold. Look at how long we've been consolidating at that zone. Most of the day, the signal was to get short, 1472. The target was 1466, so that's $600 per contract traded. However, if you were waiting for the exit signal came because it's a short trade, crossover, green close, 1466.40. NQ, okay, Sunday night, Globex Open. If you trade Sunday nights, watch for the market to move. It's already begun the journey, okay? It's doing its best to get to that zone. Fresh zones will be out Monday morning. From here, you've got one obstacle in your path. If price can get above that obstacle, you got a clear shot at that zone. So from 84.11 to 84.11 to 84.26, it's 15 NQ points, $20 a point, $300 per contract traded. 10 contract trader, it would be $3,000. But please, please, no matter where you learn how to trade, only trade what you've earned the right to trade. No more, no less. Okay? That's if you really want to do this long term. If this is what you want to do for a living. Loosey-goosey, if you treat it like gambling, that's the kind of results you'll get. Plain and simple. All right, let me clean up any questions that are in here. All right, I explained the 30-minute chart and the 4-tick range chart. Okay, what are the room hours? Did that. PU10PH. Perry, I'm not sure I understand that question. Okay. All right. We're going to wrap it up here, guys. I've shown you who we are, what we do, how we do it. If you want to become a consistently profitable trader, we can provide you with the tools, the knowledge, and the assistance required. Okay? There is no easy in the world of trading. Trading's not easy, but it can be simple. I will help you find simple. Because you attended today, Valerie's going to send each of you a spec sheet and a price sheet. We only offer 2 things. Well, there's 3. There's being a CFRN partner. That's a 90-day mentoring program. Passport holder, lifetime mentoring, plus the Concierge Trade Alerts and the LOGIC247 alerts. Okay. The third thing is the logical swing trader. Of course, every webinar has a special offer, so let me tell you what it is. To become a CFRN partner and have 90 days of mentoring, price tag for that, it's less than $3,000. It's $29.97. Passport holder, which is lifetime, less than $5,000, $49.97. That's $4,997. That's a one-time payment. Both of them give you the indicator set for life, and both of them come with unlimited one-on-one mentoring as you need it. Both of them include access to the live training room each day for 2 hours. You don't have to come every day. In the beginning, you should. It depends upon how much time you want to put into this, and how soon do you want to get to your goal, whatever it is. It takes each person as long as it takes. The passport includes both alert services. That's really the thing that separates it from just being a partner. And now, with the partnership, the 90-day mentoring, at the end of 90 days, if you want to continue, you can, $75 a month. So there's the one-time charge, and then after 90 days, it costs you $75 a month, okay? With the passport, everything is for life, okay? You with me? The logical swing trader. Valerie's going to send you details and statistics on that. Here's my super special offer for you today for taking the trial, coming out to the webinar on Friday afternoon. If you purchase the passport by midnight tonight, I'm going to include 6 months of the logical swing trader at no charge. On the passport, Concierge Trade Alerts are for life. On the LOGIC247 alerts, that's the dynamic in the moment as opportunity to develop alerts. It's good for 1 year. You renew that each year for $19.97, $2,000. Anyone that purchases a passport before midnight tonight, you're going to get 6 months, 6 months of the logical swing trader. And when your LOGIC247 comes up for renewal in 1 year, I'm going to pay that for you. Okay? That probably all sounded very confusing. That's okay. Valerie's very eloquent. She's going to send you an email. Be on the lookout for it. There is a time factor involved here. I'm not going to lie to you and say I only have so many of these available because it's a digital thing. I mean, come on. I'm never going to insult you that way. Maybe that doesn't make me the greatest salesman in the world, but I don't care. I want to be able to look myself in the mirror and God in the face, so I'm just going to tell you the truth. Let's see, is there anything else that I missed? If you asked a question and I don't see it in the stream of questions, please copy and paste it again. I'm happy to stick around and answer it. Okay, you know how to get a hold of us. The phone number is 949-42-EMINI, 949-42-EMINI. Email address support@cfrn.net. If you decide to become a passport holder, Valerie will get you all set up over the weekend. That means Sunday night at 6 p.m. Eastern. When the data starts flowing, the markets start moving, your Telegram channel will come alive and you'll have every alert, every opportunity that we find in the markets. You'll have it right there. And it's not a hearty handshake and a pat on the back. Hope you the best of luck. I'll be there in the channel. And as you need help understanding the different aspects of what we do, I'll be there to help you. You're an income stream to me. I hope you become a friend. I really do. Because if you're a believer, we're going to be spending eternity together. That does it for me. Thanks so much for coming out. If I can be of any service whatsoever, just reach out. Take care. Spend some quality time with your family. Have a great weekend. Good night.